It's Tuesday, October 6th, and of course this is the video log that takes 30,000 to a million, although today it's a little rough. But this is a unique episode because I'm doing it on a white screen. Alright, the Robinhood still white screen because it's a little aftermarket, it's not closed yet. And after I take you through the account real quick, I want to talk about Bank of America. That's going to be my stock of the day today, the bigger and better cousin of Wells Fargo Bank. So I'm going to do maybe a quick comparison too on some of the aspects and what's important to me when I look at companies like these. So without further ado, let's go into the account. Oh wait, I haven't set it up. No redos though. This thing don't get edited. Okay, so here we go. I'm sitting at 116,981, was 120 pre-market, and at one point reached those same heights intraday. But there was some news that came out that stimulus talks were going to be suspended till after the election. And this is an interesting point though, actually, because I want to talk about this for a little bit. Very interesting because this is how much 1 month's value of no stimulus is, right? So we're gonna pick up, or they're gonna pick up at the same point they left off now, a month from now, and nothing's really changed. They're still gonna do the stimulus talks, and they'll continue when they left off. And I just don't, and it's only gonna be a month delay. So this is how much 1 month of time is worth in to the markets. Alright, it's another way of looking at it because the reaction is very instantaneous. Maybe the calculations weren't made very well, and we'll have some follow through on Friday, but people will be able to think about it overnight and make a judgment on how much that time is worth to them. Maybe it's just traders speculating on how much that time is worth, but that tends to be pretty accurate. So it's very interesting. So let's go and take a look at the S&P. I'm just going to use the SPY as a proxy. And there you go. So plus 64 to minus 142 and minus 0.37 in the aftermarket. So let's call it 2%. So that's how much apparently it's worth. Maybe there are some other variables though, like for example, people thinking that the chances are going to be less of passing a stimulus package post-election, or that it's going to be modified in some way. So those risks, of course, are accounted into their thinking, but it's still a pretty massive, reduction just on a 1 month worth of time, plus some other extraneous variables. If you can think of some variables that are more important than that delay, then let me know in the comments. I'd like to hear about that. But it just seems like a pretty drastic reaction. It's not like we're not going to have the stimulus, right? It's just delayed. Okay, so it would be different if they said, okay, we're not doing anything else for the citizens. Then I understand a much bigger reaction, because the markets tend to be juiced by that money coming into the everyday person, plus all these, we're probably going to have some corporate bond support in somewhere in the Fed's going to assist that package in some sort. But it's really the money that in everybody, the everyday person's pockets, that is going to be able to boost businesses and buy up some stock, right, with that extra cash. At least it's going to boost the asset prices. That's nothing to say about the capacity of the productivity of some of these companies. Okay, so anyways, moving on. So that's the S&P. I'm down a little bit more than the S&P today. So this is of course the symbol of the option position. Then I have the strike price, whether it's a put or a call. Then I have the expiration date, how many contracts I have, and whether it's a sell or a buy. So I'm gonna quickly go through them and scroll. You can pause your video at any moment to try to figure out what my exact positions are, and then you can see the daily performance of these positions on the right. So because these are sells, the green numbers means that it's liability reduction. Okay, so a lot of these calls that I've sold are in the green. right? Because the underlying asset's going down. So here's Apple, $2,000 or so, more than $2,000 of today's decline was due to Apple. Then everything else was down a little bit. Precious metals got slaughtered a little bit, a little bit slaughtered. And so then uranium was down as well. You saw that $50 reduction in liability there for energy fuels. And then speaking of energy, oil was down, and all the oil companies, gas companies, Schlumberger, I have Road, that's Shell, and then Energy Transfer is down as well. Even financials, V, and yeah, I mean, it's pretty interesting. One thing that's odd that I found is that Rolls-Royce was actually up 19 to almost 20% today, which is pretty insane. Yeah, I'm actually no longer negative almost on this position, only down 3%. But definitely a long shot value play, recovery type of play, we'll see. Anyway, so those are all my positions. And then I'm trying to stock up more on this actually. I like Hercules Capital. I think it's up 4% on it so far. But it's got a massive dividend, and I kind of like its future prospects. Okay, so that's enough about the account. Going into the Bank of America. So Bank of America, like I said, is the bigger, better cousin. Oh, let's see if we can improve that. What's going on here? Okay. Have you been looking at a skewed screen? Okay, that's a problem. So, okay, so you were looking at a skewed screen. I apologize for that. Here are the positions just really quickly. Just scroll through them, and you can see that all the positions you can pause at any time. All right, that's it. Okay, so moving on to Bank of America. Now, like I mentioned, Bank of America is the bigger, better cousin of Wells Fargo Bank. I mean, their books actually look pretty identical, but the value, you know, the market cap of Bank of America is 210 billion right now, whereas Wells Fargo is 100 billion, which is half of it. It used to be about even, but their books are about the same. So that's why I kind of I've tried to get into Wells Fargo a little bit, just in case there is a turnaround, especially in their management, because you know, they've had trouble in management, doing all kinds of weird incentive things, and there doesn't seem to be a turnaround as of yet. But I think all that is just priced in. Anyways, back on to Bank of America here. Things to look at for me, you know, they have a 3% dividend, and their payout is only 34%. So that's super sustainable, even at this time. These times, right? Their price to earnings is about 11, and it looks like to be the same. So it would take about 11 years for you to return all of the money that you've invested into Bank of America. If you invest now. Now, one thing that I like to look at is number of employees, and they have 213,000 employees for a $200 billion company, which is quite a bit. But you know, their branches and stuff like that, it's a very intensive business, labor-intensive business, like, apparently. So it's a lot. But if you look at Wells Fargo Bank, they have more. They have 266,000 employees, and I like to buy companies that don't have that many employees, because you know, that's overhead that's going to weigh on them as they're trying to conduct business, and most of the employees are fluff anyways. Another thing that I'm looking at here is, you know, of course, the margins are decent. You know, return on asset, return on equity, and return on investment are not great, but not negative. So those are some things that I like. So I think that, you know, even in this tough environment for banking right now, with interest rates being low, they're gonna have, you know, they have a tough time generating interest, but they try to generate it through other means, and I guess it's working out okay for them so far. They have a total sales of $63.4 billion. So I mean, I would say that Bank of America, even with the troubles ahead, I'd probably buy it here. I mean, I think it's great value, and it's probably better than Wells Fargo Bank. Let's take a look at actually Wells Fargo Bank margins real quick. Yeah, I mean, their payout on the dividend, it's like half the dividend at the moment, and the payout is 229%, which is horrible. And more employees, their margins and return on assets like almost zero. So I mean, it's not looking good at this moment. It's just the only thing that's, I think, really attracting me to Wells Fargo is like, the amount of assets they have in their books, and we'll see what happens with it. But that's Bank of America for you. If you want to think of Bank of America versus Wells Fargo, like AT&T versus Verizon, Bank of America and Verizon are the better companies here. So if you want to invest into a better company, with higher yield, higher dividend, and it's actually sustainable, then that's the way to go. So actually, you might initiate some options trades on Bank of America instead of Wells Fargo. I mean, that sounds like a good proposition to me. All right, look, it's going to be nice and short and sweet. It's daylight. I'm going to end it right here, and hopefully you're making more money than I am. Down $3,000 today, so it's not very hard to beat me on this day. All right, with that said, peace out.